The global debut of the Iraqi dinar. A historic transformation, the Iraqi dinar, long the subject of speculation, debate, and patience, has finally stepped into the international spotlight in a way that is undeniable. On a crisp morning, precisely at 900 GMT, a development that many had awaited for more than a decade came to pass. The IQD appeared live on international Forex trading platforms, displaying real-time exchange rates alongside the world's most prominent currencies. Screens across trading floors in London, Frankfurt, New York, Dubai, Hong Kong, and Tokyo flickered to life with a symbol that for years was absent, almost ghost-like, now standing shoulder to shoulder with the US dollar, the euro, the British pound, and the Japanese yen. For seasoned investors and skeptical analysts alike, the experience was surreal. The Iraqi dinar, for so long dismissed as illiquid, restricted, and unavailable through mainstream channels, had broken through the invisible barrier that separated it from the world of internationally recognized currencies. The moment itself carried more than financial weight. It carried symbolism, validation, and an undeniable sense of history in the making. What once seemed like a theoretical possibility, whispered in conversations among speculative circles, had now become a verifiable, on-screen reality. The first sight, a currency reborn, the appearance of the IQD on global trading systems, was not simply a technical listing. It represented the culmination of years of work within Iraq's financial system, reforms, compliance upgrades, regulatory restructuring, and collaboration with international financial bodies. When Forex terminals displayed the dinar's early rates, fluctuating within a range of 3.71 to 3.95 per unit, it became clear that this was more than a symbolic exercise. The dinar was trading, live, with pricing, spreads, and liquidity beginning to emerge. The immediate reaction across financial markets was electrifying. Traders who had spent their careers watching currencies like the Swiss franc, Canadian dollar, or Singaporean dollar shift in predictable patterns were suddenly confronted with a newcomer whose very presence challenged long-standing assumptions. A currency once categorized as non-convertible was now globally visible. Conversations on trading desks shifted abruptly, portfolios were reconsidered, hedging strategies debated, and the role of Iraq in the global economy reassessed. For private holders who had endured years of skepticism, ridicule, and endless delays, the sight of the IQD live on trading systems was more than financial, it was vindication. For mainstream institutions, it was a moment of adjustment. For the global system itself, it was a step that underscored the ability of nations to re-emerge through reform and resilience. Breaking the barriers of skepticism, the story of the Iraqi dinar is, in many ways, a story of doubt. For years, critics argued that Iraq's heavy dependence on oil, political instability, and fragile economic foundations would prevent its currency from ever achieving international recognition. The dinar, they insisted, would remain trapped as a restricted local unit, useful for domestic transactions, but unfit for the rigor of international markets. These voices carried weight. After all, Iraq's history was filled with financial upheavals. Sanctions, wars, and inflationary crises had repeatedly battered its economy. Many traders, analysts, and economists dismissed the idea of a true IQD reintegration as unrealistic, or worse, a fantasy cultivated by hopeful investors. And yet, the Forex screens told a different story. The reality of live IQD pricing undermined years of skepticism. What was once considered impossible was now irrefutable. The transition from whispers of maybe one day to the certainty of here it is was not merely about numbers. It was about narrative, about how global finance recognizes nations, about how persistence and reform can eventually overcome cynicism. Structural foundations. Why now? The listing of the IQD did not happen in a vacuum. Behind the scenes, Iraq had been laboring for years to build the structural foundations necessary for such an event. According to analysts like Jaffe Kim Allman of the Baghdad Economic Forum, Iraq's reforms in monetary policy, banking governance, and compliance with international standards played the decisive role. For a long time, Iraq struggled with financial systems that lacked transparency and global credibility. Issues of corruption, informal markets, and outdated regulatory frameworks kept the dinar confined to a restricted status. But a slow, methodical program of reforms changed this trajectory. Monetary restructuring, modernized the Central Bank of Iraq's approach to currency management. Regulatory improvements aligned Iraqi financial laws with international compliance standards. Oversight by global organizations, including collaboration with the International Monetary Fund, IMF, provided credibility and external assurance. Economic diversification efforts, though ongoing, signaled Iraq's determination to move beyond oil dependency. These reforms collectively opened the door for the IQD's global debut. Allman emphasized that this was not a temporary or symbolic move, but rather a demonstration of Iraq's readiness to participate as a legitimate player in international finance. The dinar's live listing reflected maturity, not mere speculation. Market reactions, excitement and caution. The immediate aftermath of the dinar's debut was characterized by both excitement and caution. Forex strategists in London described the development as historic, while traders in New York referred to the sight of IQD pricing as unreal. Still, the excitement was tempered by recognition of the risks that accompany the introduction of any new currency into global systems. Susan Miller, a senior Forex strategist based in London, described the initial volumes as promising. She noted that both retail traders and institutional funds were showing interest, but she cautioned that the early days of a new listing often bring volatility. Rapid swings in pricing, thin liquidity in certain markets, and adjustments as supply meets demand are all expected. This is not the end of the story, Miller explained. It is the beginning. Markets will test, rebalance, and adjust. In the United States, Michael Torres, a Wall Street insider, highlighted another angle. He suggested that several major American banks had been preparing for this moment long before it became public. According to him, reserves of Iraqi dinar had quietly been accumulated, and systems for managed liquidity and structured access had already been tested. This, he argued, demonstrated that the debut was no accident, but rather a carefully coordinated rollout involving both regulators and institutions. Such perspectives underscore a key truth. The IQD's appearance on Forex screens is not a random occurrence, but the culmination of strategy, preparation, and timing. Psychological validation for long-term holders. Perhaps no group felt the impact of this development more deeply than private holders of the dinar, often referred to in communities as tiered investors. For years, these individuals faced criticism and skepticism, accused of chasing a mirage. The mainstream narrative often painted them as unrealistic, clinging to a dream that would never manifest. Now, with the IQD visibly trading live, those doubts have been transformed into validation. While questions of liquidity, access, and structured participation remain, the psychological barrier has been shattered. The debate is no longer about whether the IQD can trade globally. It is about how it will evolve within those markets. This validation carries weight far beyond financial numbers. For many, it represents a lesson in patience, perseverance, and belief in long-term trends despite widespread doubt. It reminds investors that history is full of moments when dismissed possibilities became undeniable realities. Banking readiness and institutional infrastructure. Further confirmation of the seriousness of this transition comes from reports within the banking sector. Several major international banks, including Wells Fargo, HSBC, Chase, and Bank of America, are rumored to have been testing and preparing systems to handle IQD transactions. Forex counters, verification systems, and phased appointment protocols are said to be part of this structured rollout. At some New York locations, HSBC has reportedly activated directives to prepare for IQD verification, while Chase has trained staff on new protocols for handling the currency. Wells Fargo counters, according to industry chatter, are now displaying IQD pairs alongside other global currencies, such as the Vietnamese dong. These developments suggest that infrastructure for IQD transactions has been quietly built and is now being activated in phases. The strategy is clear: stability, control, and gradual integration rather than chaotic free-for-all access. Lessons of reform and patience. When seen in the broader context, the IQD's debut offers lessons that extend beyond Iraq. It illustrates how disciplined reforms, compliance with international standards, and patient strategies can transform even the most restricted currency into a globally recognized participant. The implications stretch beyond Iraq. Already, observers are asking whether other currencies, such as the Vietnamese dong or Zimbabwean dollar, might one day follow a similar path. While circumstances differ, the principle remains. Reforms, governance, and readiness are the keys to reintegration. For Iraq itself, the lesson is equally profound. The years of preparation, negotiation, and adjustment have paid off in a way that is now visible to the world. The IQD's debut is not simply about exchange rates. It is about legitimacy, credibility, and Iraq's role in the global system. Looking forward, a managed journey, the journey ahead is expected to unfold in stages. In the short term, markets will test the waters, probing liquidity, experimenting with pricing, and gauging supply and demand. In the medium term, structured access systems and tiered participation may continue, ensuring that volatility does not destabilize broader financial systems. In the long term, analysts predict that the IQD will become a fully integrated currency, traded daily across global platforms alongside its peers. This phased approach reflects the reality that integration is not an overnight event. Instead, it is a carefully managed process, one designed to balance opportunity with stability, potential with responsibility. For investors, analysts, and institutions alike, the message is clear. Patience remains as important now as it was in the years leading up to this debut. Observation, caution, and adaptability will be vital as the story of the IQD continues to unfold. The broader impact of the Iraqi dinar's global integration. The moment the Iraqi dinar, IQD, appeared on live Forex platforms was more than a technical breakthrough. It was a pivot point with far-reaching consequences. While Section 1 explored the historic debut, reforms, and immediate reactions, this section examines the wider implications of the dinar's reintegration. From institutional strategy to geopolitical influence, from investor psychology to global monetary lessons, the IQD's listing is set to reverberate far beyond the trading desks of New York or London. Institutional recalibration. Banks and funds adapt to the new reality. The financial world rarely welcomes change easily. Yet when undeniable shifts occur, global institutions move quickly to adapt. The sudden appearance of the IQD on trading terminals has compelled banks, hedge funds, and sovereign wealth entities to re-examine their portfolios and long-term strategies. Major international banks such as HSBC, Wells Fargo, JP Morgan Chase, and Bank of America, already rumored to have prepared systems for IQD handling, now face the task of integrating this currency into their day-to-day operations. Beyond technical readiness, they must make decisions about liquidity allocation, how much capital to devote to IQD transactions without exposing themselves to destabilizing risks. Risk management, designing hedging strategies for a currency with limited historical trading data. Client services, preparing to offer IQD-related products to private clients, institutional investors, and corporate customers seeking exposure. Regulatory compliance, ensuring that each transaction aligns with both domestic oversight and international anti-money laundering standards. K for hedge funds, the IQD presents both opportunity and danger. Its novelty and potential volatility create fertile ground for speculation, but they also demand caution. Funds thrive on exploiting inefficiencies in new markets, and the IQD's early trading days will undoubtedly provide those openings. Yet wise managers will balance enthusiasm with realism, recognizing that the Central Bank of Iraq and global regulators are likely to keep a firm grip on liquidity flows. Sovereign wealth funds, particularly in the Middle East and Asia, may see the IQD as a natural diversification play. Iraq's geographic and economic significance, especially within OPEC, makes its currency more than a speculative asset. It becomes a geopolitical hedge, a way to align portfolios with emerging regional realities. Private holders. From patience to participation, no group has waited longer for this moment than private dinar holders. Often dismissed as dreamers, they endured years of skepticism, being told that the IQD would never achieve global visibility. For them, seeing the dinar listed live was not merely financial validation, it was emotional and psychological confirmation of their perseverance. However, participation is unlikely to be immediate or unrestricted. Reports suggest that banks are implementing phased appointment systems and structured protocols for handling private IQD exchanges. This controlled rollout ensures that the sudden influx of currency into markets does not destabilize pricing or liquidity. For these holders, the transition is both liberating and complex. On the one hand, their long wait has reached a turning point. On the other hand, access is likely to be carefully managed. Patience, the very quality that sustained them through years of waiting, will remain essential during this new stage. The lesson is clear. Recognition does not immediately translate into unbridled opportunity. Structured processes, regulatory frameworks, and market realities will govern the speed at which private holders can engage fully. Global economic significance. Beyond Iraq's borders, the IQD's listing is not just a story about Iraq. It is a signal to the world. It demonstrates that currencies once confined to domestic or restricted use can, through disciplined reform and global cooperation, become integrated into the mainstream financial system. For international markets, this raises several important questions. 1. Geopolitical balance. Iraq's reemergence as a financial actor shifts dynamics in the Middle East. No longer only an oil exporter, Iraq is now presenting its national currency as a vehicle of exchange, giving it new leverage in international partnerships. F2. Regional investment. Iraq's neighbors, including Turkey, Jordan, and Gulf states, will likely see increased cross-border flows of capital. A tradable IQD enhances Iraq's attractiveness for regional investors, infrastructure developers, and multilateral organizations. 3. Energy economics. As Iraq continues to export oil, the ability to price and settle contracts in IQD, something once unthinkable, could gradually shift dynamics within energy markets. While the US dollar remains dominant, diversification of transaction currencies is an emerging trend. 4. Global financial lessons. The Iraqi example underscores that nations once thought permanently marginalized can return to global systems. It is a lesson in resilience, reform, and the importance of long-term strategy. Investor psychology. From skepticism to strategy for years, the IQD was wrapped in skepticism. Many investors dismissed it as a speculative fantasy, while mainstream commentators often painted dinar enthusiasts as misguided. This cultural and psychological backdrop makes the live listing even more powerful. It shifts the conversation from ridicule to strategy. Investors who once laughed at the very idea of trading IQD are now asking, should we allocate a percentage of our portfolio? How volatile will this new asset prove to be? Could early adoption provide outsized returns? This reevaluation illustrates a broader truth in financial psychology. Once a possibility is proven real, even the strongest skeptics are forced to adjust. The transition from "that will never happen" to "how do we position ourselves?" is one of the most powerful shifts in investing. The role of managed liquidity, one of the most critical aspects of the IQD's integration, is liquidity management. Currencies do not succeed globally by accident. They require consistent flows, reliable pricing mechanisms, and stability supported by central banks and partner institutions. Reports indicate that Iraq's central bank, in collaboration with international partners, has adopted a strategy of tiered liquidity access. This ensures that the largest players, major banks, sovereign wealth funds, and institutional investors, have structured pathways to participate without overwhelming the system. Smaller participants, including private holders, are gradually phased in. Such an approach mirrors historical precedents. When other emerging market currencies first entered global platforms, they often faced destabilizing volatility. By contrast, Iraq's carefully managed rollout aims to smooth this process, avoiding the kinds of wild swings that could undermine confidence. Potential ripple effects. Who's next? The successful debut of the IQD raises natural questions about other currencies that have long been restricted or marginalized. Observers are already speculating about the Vietnamese dong, VND, or Zimbabwean dollar, ZWL, as potential candidates for similar reintegration pathways. While each case is unique, the principle remains the same. Reform, compliance, and credibility are prerequisites. Economic diversification is essential to support stability. International partnerships provide legitimacy and oversight. The IQD's example does not guarantee that other currencies will follow, but it does provide a blueprint. Nations that once seemed permanently excluded from the financial mainstream now see that reintegration is possible, if the right steps are taken. The geopolitical dimension. The global debut of the Iraqi dinar carries significance far beyond financial charts. It is a geopolitical event with implications for alliances, regional influence, and international power balances. For Iraq, it represents sovereignty and legitimacy. A currency that is globally tradable signals that the nation has stabilized sufficiently to participate in world systems. For the Middle East, Iraq's reintegration may shift trade flows, enhance cooperation, and even challenge established financial hubs. For global powers, particularly the United States, Europe, and China, the IQD's emergence is a new variable in economic diplomacy. Each will seek to shape and benefit from Iraq's reintegration in different ways. In essence, a currency is not only an economic tool, it is also a political statement. Iraq's live Forex presence signals its return as an actor to be reckoned with. Long-term vision. What lies ahead looking beyond the immediate excitement? The future of the IQD will depend on several key factors. 1. Sustained reforms. Iraq must continue building on its progress, ensuring that financial governance remains transparent and robust. 2. Economic diversification. Reducing dependence on oil is essential. A diversified economy strengthens the foundations of any currency. 3. Institutional trust. Global markets thrive on trust. The Central Bank of Iraq must maintain credibility through responsible policy and consistent communication. 4. Integration with regional systems. Iraq's ability to anchor itself in regional trade networks will bolster demand for the dinar. If these conditions are met, the IQD could evolve from a novelty into a mainstream, reliable currency over the next decade. A lessons for the world at its core, the story of the Iraqi dinar's reemergence is a story about possibility. For nations, it demonstrates that through reform and resilience, reintegration into the global system is possible. For investors, it highlights the importance of patience, belief, and readiness to act when opportunities shift from theory to reality. For institutions, it shows that preparation and strategy are essential to managing change. Most importantly, the IQD's debut is a reminder that global finance is dynamic. Currencies rise and fall, nations transform, and assumptions once considered unshakable can be overturned. The world is witnessing not just the rebirth of a currency, but the reaffirmation of a truth as old as trade itself. Value is not static, and history has a way of surprising even the most skeptical observers. Conclusion. A turning point with Ripple affects the IQD's integration into global Forex platforms is not the end of a journey, it is the beginning of a new era. For Iraq, it symbolizes legitimacy and maturity. For investors, it offers both opportunity and challenge. For global markets, it provides a lesson in how reform and patience can reshape financial realities. The ripple effects of this development will continue to unfold in the months and years ahead. Institutions will adapt, investors will strategize, and nations will watch closely. Whether one views it as a financial revolution, a geopolitical milestone, or simply the long-awaited fulfillment of speculation, one fact is undeniable. The Iraqi dinar is now a participant in the global stage, and the world must adjust accordingly. What was once dismissed as improbable has become undeniable reality. The dinar's journey from restricted obscurity to global recognition will be studied, debated, and remembered as a moment when persistence met preparation and changed the landscape of international finance. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.